Hello, I'm Clement from Similarweb's Investor Solution. Today we'll be going over the companies that we covered in Q4, and we'll give you some more insights on their performance in January. But first, I want to say thank you to all the people who downloaded our reports and that signed up to receive all of our reports for next earnings season. We'll be back with more, so be sure to sign up yourself. Netflix missed its US subscriber growth in Q4 and provided weak guidance for Q1. In January, we see that US monthly unique visitors to Netflix domain dropped by 10%. Now, this isn't a perfect metric and doesn't mean that Netflix will miss the projection of growth for Q1, but it does mean that Netflix might have a retention problem and that it will struggle to keep its users on its platform. Peloton had an amazing boom in last January, and it grew a lot. It makes sense. New Year resolutions are a lot around fitness and health. So January 2020 is a critical month for the company. If it can continue growing, it may be on the right track. Now, our data shows that US monthly unique visitors to the members area actually grew 30% in January compared to last January, which shows that Peloton is still growing nicely and is still on its way up. Snap. Before earnings, our data showed that US daily active users were up 3% since last quarter and 12% on the year. When Snap reported, it showed that its global growth was 4% since last quarter and 17% since last year. However, unfortunately, Snap had a weak January, and we see that US daily active users are actually down 7% since last quarter. This means that Snap will need a very strong February and March to hit its targets for Q1 2020. Before Spotify's report, we saw strong download growth in Q4. However, Spotify lost a lot of money and investors didn't like that. The stock tanked after earnings. But it still reported 271 million active users in 2019, which is more than was expected. In January, we saw that Spotify added 4 million downloads in the US, which is 30% more than what it had in January of last year. This means that Spotify needs to monetize its user base, but the user base isn't the problem here. Consumers are still very interested in what Spotify has to offer. Grubhub had a terrible Q3, and before its Q4 earnings, we saw that Q4 was not to be nearly as bad as Q3 was. And we saw that Grubhub actually bounced back, and it beat its expectations on active diners. It had 22.6 million active diners compared to the 22.2 expected. Now, in January, monthly unique visitors to Grubhub crossed the 10 million visitors, and it's the fourth consecutive quarter of growth. This means that while the industry is still very competitive, Grubhub still manages to make the most of its customer base. That's it. We hope you had a very successful earnings season. We'll be here to cover next earnings season as well. If you want to receive all of our reports for next earnings season, please sign up and we'll be sure to send them to you. If you want to learn how you can create your own reports and generate insights on any company, contact us and we'll be happy to show you how it's done.